Hi, I'm Pat Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, May 30th. We'll start this week's report by taking a quick look at the market activity for the week. Both the Dow Jones Industrial Average and the S&P 500 lost ground this week. The Dow was off 0.9% and the S&P 0.3%. Both indices suffered the lion's share of the losses on one trading day, which was triggered by the political turmoil in Italy. The losses that day occurred because it looked like Italy was going to have to hold another election in July due to the fact that the new PM was not receiving any support from the major political parties in Italy. Both indices recouped most of these losses on the next trading day, as it looks like a potential solution was found to this problem. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at our macro groups. Equity mutual funds had net inflows last week of roughly $526 million. Taxable bond funds took in $375 million in net new money. Muni bond funds saw almost $100 million leave their coffers, and money market funds took in $9.4 billion in net new money for the week. We'll move on now and take a more granular look at each one of our macro groups. We'll start with the equity fund group. As we said previously, the equity mutual funds took in net new money last week, just over $500 million. And continuing the long-term trend, all of the money this week went into non-domestic equity funds. They had net inflows of $895 million, while domestic equity funds saw roughly $370 million leave their coffers. Just to illustrate the trend we've been talking about for the year to date, non-domestic equity have net inflows just shy of $55 billion, and domestic equity funds have net outflows of just shy of $29 billion. Let's move on now. We'll look at the equity ETF group. Net inflows here last week as well. The group took in $4.3 billion in net new money. It was their 8th straight week of inflows, which pushed their year-to-date increase to just shy of $68 billion. Other major contributors to the inflows last week was PowerShares QQQ, net inflows of just over $1.1 billion. And then there was the iShares Edge MSCI Minimum Volatility USA ETF, which had net inflows of just under $1 billion at $931 million. And on the flip side of things, the iShares MSCI Emerging Markets products saw net outflows of just about $750 million. We'll move on to our taxable bond fund groups now, starting with mutual funds. This group also had net inflows last week, $375 million. It was their 3rd straight week of net inflows and pushed their year-to-date increase to $46.7 billion. The major contributors to last week's net inflows was the ultra-short obligation funds peer group and the loan participation funds peer group, which had net inflows of roughly $560 million and $450 million respectively. Moving on now, we'll look at our taxable bond ETFs. Slight outflows for this group last week. Just over $200 million left their coffers, which reduced their year-to-date increase to $30.4 billion. The major individual moves last week belonged to the iShares 20-plus years Treasury product, had net outflows of $412 million. The iShares 0 to 5-year high yield products saw net outflows of $364 million, and the iShares iBox high yield corporate ETF had net inflows of just shy of $950 million. Our next group to take a look at is the municipal bond fund group. As I mentioned earlier, net outflows here last week. They saw about $89 million leave their coffers, which reduced their year-to-date net inflow to $4.2 billion. The peer groups last week, which were most active, was short intermediate muni debt funds saw $68 million leave their coffers. The short muni debt fund group saw $57 million leave. And on the flip side of that was the high yield muni debt fund group took in just over $200 million in net new money. Our last group to take a look at this week is money market funds. Once again, a lot of activity here last week. They had net inflows of $9.4 billion. This reduced their year-to-date net outflow to just around $11 billion. The major contributors to last week's net inflows was the institutional U.S. Treasury money market peer group, and the institutional U.S. government money market peer groups, which had net inflows of $6 billion and $5.2 billion respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.